What is going on, Benzinga Nation? You know we love to go and provide you insights and give you all the tools and resources that you need to be successful in the financial markets. Now, one of my favorite ways to go ahead and trade is with leveraged ETFs. I mean, how many times have you heard NVIDIA hitting all-time highs, volatility with Tesla, and a few other tickers as well? And, there's options that you can go ahead and utilize as well, but there's also different leveraged ETFs, especially the ones that Direxion provides that you're able to utilize to get those extra gains if you have strong conviction in the trade thesis that you have. Now, there's someone that's a little, more experienced than me in these, and that's my man Gianni. So I'm gonna go ahead and bring him on. Gianni, what's going on? Welcome to the show, man.
Sinead, how you doing? Thanks for having me.
I'm doing great. And I was just saying, I think NVIDIA's once again, I think it was up like 1% last time I checked this morning. So it's already kind of moving and grooving. Tell me a little bit about like how you utilize leverage ETFs. I know you have some charts that you're going to go over as well, but for the folks at home that might be unfamiliar with what leverage ETFs, give us a little bit of insights on what they can use with it.
Sure. So leverage ETFs are a really powerful tool if you are more of a short term or even a day trader. Can really amplify moves in a particular direction. And especially for names like NVIDIA that have led the market higher, if you don't want to trade options, if you don't want to trade on margin, these leveraged ETFs give you an opportunity to compound your returns. Now, granted, that can be to the downside too. So you need to know your technicals, know your charts, and know how to manage risk. So we'll talk about that today and how to apply those tools and give you a practical solution to trade these types of funds.
Now, I'm sure the answer to my next question here will be that it depends, but I'm going to ask anyway. Are you a fan of when you're coming to utilize Direxion's ETFs? Do you prefer to day trade them or do you swing trade them? Because I know there's some mechanics to it to where you may want to only day trade and swing trade because of resets. But I'll tell you what, I'm going to go ahead in the back. You can share your charts and talk about what you've got, and I'll be back in a short.
Sure. Thanks, Sinead. So yeah, my preferred way is to swing trade them. I mean, you can day trade them, and that's become a lot more easy to do given the recent change in trade settlements. Now it's T+1, but even when I started in the business years ago, it was T+3, and you go back way into the past, it was T+5. So the evolution of the market environment has really helped make these products more useful and suitable for short-term trading. But I'm more of a swing trader myself. I prefer to buy the breaks of certain price patterns. I'm going to talk about that today and show you some of the favorite funds that I like to use with Direxion, in addition to some emerging setups that I'm seeing in the market right now, especially in the near term. Again, because these types of leverage products, as Junaid mentioned, they reset every day. So you really need to understand how the percentages move across a period of time. It's not like, the S&P was up 10% over the month, so these funds are going to be up 300% if it's a 3x bullish fund. It's a little more nuanced than that because they're resetting on a daily basis. So let's go ahead and take a look at some of the setups that I'm seeing in the market right now to kind of give you some ideas on some areas to focus on with these leverage products. And just a little bit of background about me. As Junaid mentioned, I'm Gianni Poce. I've been trading now for over 13 years, and I'm a trader and educator over at Theo Trade. So that's a great way to get some additional idea generation as well. So one of the markets that I'm watching very closely right now is semiconductors. And the reason being is because chips have a tendency to lead the market, both to the upside and to the downside. Semiconductors are known as a leading indicator. And even within the context of technology itself, think about all the changes and evolutions going on within the tech sector with artificial intelligence, all these companies investing massive amounts of money into AI. And to do so, they need all new chips. So the semiconductor sector has become all that more important for helping gauge the level of risk appetite within the tech sector. So, a lot of times you'll see semiconductors lead the move in tech, and then tech actually leads the market. So having an understanding of what's going on in the semiconductor sector is absolutely imperative to help gauge the overall risk sentiment for the stock market. But I'm starting off with a longer term snapshot picture here in the semiconductor sector, because even though Direxion's products are geared for short-term trading, it always helps to trade in the direction of the underlying trend. The reason being is that you're going to get the biggest magnitude of price moves in that underlying direction. In other words, if a market is in an uptrend, you're going to get bigger swings to the upside than to the downside. If a market is in a downtrend, you're going to get bigger swings to the downside than to the upside. So all of these direction products that track various indices, you can go on Direxion's website and see what index the fund is tracking. Take a look at the index itself and see what it's doing on a longer term horizon. Now, you're not going to trade necessarily on that longer term horizon, but for me, it helps give me an idea of where the greater directional move will take place. And that helps me narrow down whether I want to trade it on the bull side or the bear side, because it's all about capturing the probabilities, right? If a market's in a bull trend and I trade on the bull side, the probabilities favor me capturing a greater percentage of that move to the upside versus the downside. So semiconductors, as you can see very clearly, in an uptrend. What is an uptrend? It's characterized by a series of higher highs and higher lows. Now, I have a couple of patterns drawn on this chart as well, because these help give you an idea whether the expand or contract. So semiconductors broke out from this cup and handle formation at the beginning of this year. It's a classical momentum pattern. As you can see, prices accelerated to the upside. Now, we were trading within this ascending channel, which is bullish, but we broke the channel. Now, a lot of traders come in and will see this and say, oh, we broke the channel, this is bearish. No, not so fast. That is not the case. All the breaking of a channel means is that the previous rate of ascent, or the slope of the rally, is no longer in effect. So this has serious ramifications when you consider that semiconductors almost doubled. The semiconductor index almost doubled from its low here in October of 2023 to its high here earlier this year. I believe it was in July 11th. So that was quite the move. You know, when you go up that much in that short of a period of time and you break the channel, all it tells us is that, hey, the uptrend is still in effect. However, the rate of ascent, the momentum of the move, is no longer there. So we're building a new base, so to speak. So how do we trade this? How would I trade this from a practical standpoint? Well, you have the triple leveraged long ETF, and just to be clear, this is the Philadelphia Semiconductor Index that these funds track. So what you're seeing here, you see how it blew up in July. So it would have done well with the SOXS fund that had quite the move on the upside in July. But as you saw in that previous chart of the index, you're still in a longer term bull trend. That being said, an argument could be made that these losses are being consolidated. So these price patterns that I'm sharing with you can be applied on these leverage charts as well. So again, these aren't the type of products to just come in and trade on a hunch or fundamentals, really. Yeah, there might be some fundamental catalysts, but I've always found it more useful as a trader to understand the charts, the technicals, the price patterns, the momentum, evidence of accumulation, distribution, things along those lines. So what you're seeing here is a symmetrical triangle formation. These are often considered to be continuation patterns. And like I said, the long-term trend was up, but in the short term here, you did take out this low from April. You rallied back higher after this bottom in August, formed a lower high. You did form a higher low, and then you formed a, I would say this is a consolidation, a digestion of the losses, if you will, and it does warrant some caution on the long side. But, you start to break above this upper trend line here. I think from a technical standpoint, you could have the technical catalyst for a move to the upside. But let's say that the short-term downtrend in semiconductors continues. Well, then in this case, you'll note here that you had a secondary higher low form at the end of September compared to that low in July. And that is the first step in the establishment of an uptrend. So you could see another pop here. I would call this, another symmetrical triangle. And again, the long-term trend here and the inverted triple leveraged semiconductor ETF is obviously down, but you do have the first step from a technical standpoint to reestablish and move to the upside. So, I'm trying to play both sides of this, or share both sides. Whether you want to be a bull or a bear on this, you have to wait until you actually break those support or resistance zones. Let's talk about China. Obviously, this is a very hot market right now. And when you look at what's going on in China, we're using the FTSE, the FTSE China 50 index. Direxion has triple leveraged funds that cover this on the upside and the downside. But big things happening in China. There's been a tremendous amount of stimulus come into the Chinese market. But, just to be clear from that standpoint, China's been trying to stimulate their market for a long time. This is nothing new. So what has changed just over the last couple of weeks? Well, in case you didn't know this, the Chinese market has a lot more holidays than we do. They're not open for 252 days a year like the U.S. market is. There's a couple, a few less days because of holidays domestically as well. But the Chinese market will go days and sometimes even a week of being closed. And what happened was we came back from one of their recent holidays and it exploded to the upside. But from a technical trend following standpoint, you can see that the Chinese market has suffered tremendously since its high in the first part of 2021. Definitely a bear trend, lower lows and lower highs. But you did form that bottom in the FTSE China 50 index in late 2022, October of 2022. You retested that low earlier this year in January, formed a secondary higher low. But look at what we did now. You rallied back higher, formed another higher low. And this most recent rally that we had in the last couple of weeks took out the highs from 2023 and really is now testing, some key resistance levels from 2022 as well. So the evidence is kind of shifting from a bearish market in favor of a bullish market in China now. And that means we need to adjust our strategies from a technical standpoint from bearish to bullish. At least that's how I would be approaching that. But it's not completely out of the woods yet, right? So you have this rounding bottom formation here. Prices are starting to pop up against resistance. If it can hold this former resistance, now I would call it support, right? Because when resistance breaks, it becomes support. If we can hold this level here, let's call it, 14,500, 15,000 in the China, in the FTSE China 50 index, I think you have a catalyst for a major rally to the upside that could take this index much higher. And in that situation, I think Direxion's Yin fund, China Bull 3X shares, would be a much better trade in the near term. But as you can see, it's experienced quite the move over the last couple of weeks. So this is overbought, right? The fund has almost tripled in the last 3 weeks. Probably not a move that I would chase, to be honest with you. So what that's going to do is open up an opportunity for a mean reversion or a retracement of this swing move down back to the upside through this Yang fund. So that's the beauty of these leveraged ETFs, is that it allows you to trade as a swing trader these short-term directional moves that last, anywhere from 3 days to a couple of weeks. But really beyond that period, it's not really the best idea to trade. And remember, you're not going to capture that entire percent move on the index because these funds reset on a daily basis. So again, I think you're going to get greater magnitude of moves to the upside in yin over the coming weeks and months. But near term, I think the odds do favor a retracement back to the upside in the triple leveraged bear fund, otherwise known as Yang. Zunaid, what's up?
Man, it's, we've talked about it, like in the beginning of the show, we talked about NVIDIA and all the hype about, from year-to-date gains and things like that. But there are also international events, such as what's happening in China at the moment,
Right.
which you're going over there in terms of leverage. So We saw BABA and all these other tickers kind of move up, and then now obviously they were down a bit today. And so you'd always take advantage of not just what's happening domestically, but also internationally as well. And I know we've got our special guest with us here as well, Shawn Edwards, who is the Vice President of Institutional ETF Strategist. So let me go ahead and bring Shawn on to join the show. Shawn, how's it going?
Good, Gianni. Thank you. Thank you for having me. Hi, Gianni.
Shawn, how you doing?
Good.
Gianni, we'll go over, what Shawn has to talk about, starting with a disclaimer as part of the deck, and we'll kind of continue because I know you've got some more charts and different things like that. And I want the viewer at home to kind of understand, hey, what does it mean when I know you briefly explained it as well. Hey, what is 2X? What is 3X in terms of risk management? How, the factual basis of it. And I'd love to continue getting your insights on the charts side as well. But Shawn, how long have you been with Direxion?
I've been with Direxion for 4 years.
Okay, gotcha. Were you a trader before then? Give us a little bit of your background in the financial markets.
Sure. So various roles within finance. Got my start trading, some experience within wealth management, but now within the ETF provider space. So various roles for about a decade within the industry.
Gotcha. All right. Well, I appreciate you for joining us. Gianni, the show is all yours. I'm going to go in the back. Shawn, thank you again for your time.
No problem.
All right, Shawn. Well, it's good to have you on here. So I know the viewers are going to want to know a little bit more about the inner workings of these products. So I'll let you take that away. And if you want me to chime in anything, just let me know in the meantime.
Absolutely. So, Gianni, thank you. This slide is a beautiful slide. It's our disclosure slide. We don't have to spend too much time here. So we can go to the next slide. So again, thank you all for having me today. I just wanted to take some time and introduce Direxion for those who are unfamiliar. I know in a few of the slides that you went through previously, Gianni, we did reference a few of our ETFs, but let me just peel back the layers of the onion that is Direxion. Again, we are an ETF issuer located in New York City, but we have offices in Milwaukee, Boston, and Hong Kong. And I share that just to show that the leverage and inverse ETF space, it's global. As I mentioned, we do have upwards of 80 ETFs. Those ETFs are there to help investors, traders solve for specific investment outcomes, whether you're short-term and tactical or strategic and long-term. As an ETF issuer, we are ranked in the top 20 globally in ranking of our AUM. So as you can see here on this slide, our assets have just consistently been growing, and you'll see the increase in assets from 2020 through now. And I mentioned 2020 because, as we all know, that's when the pandemic occurred. But you see out of that pandemic, the appetite for risk, it didn't decline. It looks like it actually increased. I mean, we've been beneficiaries of that as we, have traders and investors that are looking to, further add alpha to their own investment portfolios. So we're glad to help investors meet those goals. And we can move on to the next slide. And just to highlight and just provide some additional background within the leverage and inverse ETF landscape, Gianni, you touched on a few of the market segments and sector exposures that we offer. Again, 80 leverage and inverse ETFs. It spans from 3X ETFs, 2X ETFs, and then inverse ETFs at the 2X inverse 2X range, inverse 3X range. What you'll see here in this chart is that the majority of traders, as you saw in the previous chart, they're trading, but they're looking to get exposure within 3X bull ETFs and 2X bull ETFs. I'll just highlight, and Gianni, I saw that you'll also discuss this a little bit later. We've launched recently leverage and inverse single stock ETFs, just to show, again, the appetite within the marketplace for tools and ideas that will allow you to, again, add alpha to your portfolio trading strategies. The leverage and inverse ETF landscape, it's constantly growing. We look to position ourselves as a place that you can look to if you're looking for, exposure, whether it's in broad market segments, whether it's in single countries, whether it's in single stocks, fixed income, etc. We're here to provide tools for traders. We can move on to the next slide. And again, just to highlight, and Gianni, you mentioned in the previous slide as you were discussing what you were seeing from a technical standpoint, leverage and inverse ETFs, they're designed to be used short term. They're tactical trading tools. If you go to our website and you pull up any of our funds, you'll see that all of our funds have a daily investment objective. And that daily investment objective, it's really important to understand that whether you're in a bull fund or a bear fund, that the daily investment objective is to provide you that enhanced exposure for just a day. So if you're holding any of those positions for periods longer than a day, you should not expect to see that 2x or 3x performance. So again, daily investment objective, tactical short-term trading tools that you can use, to express conviction where you see fit. And so just some further kind of explanation into how we look to provide that exposure. Again, if you go to Direxion's website, you can pull up any fund. For example, let's say SPXL, which gives you 3x bull exposure to the S&P 500. There's a link within that fund page that will show you the daily fund holdings. And the daily fund holdings will show you how we look to provide that exposure to our leverage products. And so typically we're going to give you that exposure to that index by buying an ETF that tracks the same index or an equity basket, so a basket of stocks that replicate the index, and they will include swap exposure so that you can get that enhanced exposure for that particular index. So for SPXL, for example, we buy the basket of stocks and we use a swap on the S&P 500 index. So just to provide some background on how we look to provide exposure to traders if they're looking to use our leverage or inverse ETFs. And so I would say if you have the opportunity to screenshot this slide, this is probably one of the most important slides in helping to drive home the importance of compounding and rebalancing when you're using leverage and inverse ETFs. So I'm here to, scream it till the cows come home. It's important to make sure that you understand the impact of compounding and rebalancing when you're utilizing leverage and inverse ETFs. After this slide, I'll spend some time on this slide, but after this slide, it'll just drive home the point even more why you should be attentive to your investment when you're trading leverage and inverse ETFs. I'll simplify this chart in this slide. We'll start at the top row. Let's just say that we're looking to invest in a leveraged bull ETF. That's our thesis. We're interested in a leveraged bull ETF. It could be SPXL once again. So our thesis is that the S&P 500 is going to increase in the short term. So let's go through this hypothetical example of compounding and how we should approach trading leverage and inverse ETFs. So again, in that first row, let's say our initial investment is $100. So our initial exposure, if we're investing in SPXL, which once again is the S&P 500, gives you 3x exposure to the S&P 500. It's a bull product. That initial exposure that we're looking to get is 300. And let's just say again, on the first row, the index rises 5% that day. That's a pretty great trade. So that first day, our total exposure, the index increases 5%. Our ETF SPXL will increase 15%. So our ending day assets, we would have started the day with 100 based on that 15% movement. Our end of day assets are 115. So that end of day exposure, when we're looking at SPXL, would actually be 345. So our return for the day, the total return for the day is 15%. So once again, great trade. Our research, the technical indicators that Gianni went through have helped us, and we're smiling. It's a pretty nice day. But let's just say we want to continue to trade SPXL and we hold it another day. And so in the second row, what you'll see is a scenario in which the index rises 5%. So we begin the day with 115. The index moves 5%. So our total exposure is 15%. And so that 15% is compounded on our beginning day two balance of 115. So we end day two at $132.25. So that's a cumulative return of 32.25%. I'll stop here for a second. This is compounding 15% on 115. We end the day at 132.25. Most would think we could just probably take that 15% and just add it up to, or add it to that 15% from our first day's gain and get just a simple compound or simple addition of 30%. But that's not the way compounding works. I wanted to point this out because in the next scenario, we'll see why thinking that the simple, math there will work against you, and you have to understand compounding. So if we move to the third row, and so again, the first day, we ended up 15%. So day two assets, we start at 115, but instead of SPXL rising, it falls 5%. Our total exposure there is a loss of 15%. So that compounds on your beginning day's balance of 115. So that 15% is compounded. It brings you below your original investment of $100. So your ending day assets are at $97.75. So again, this highlights how compounding can work for or against you. In the first scenario, you see the index rises, compounding works for you. And day two, compounding works against you. And so you see you're below your original investment only after 2 days. In the next few slides, we'll highlight this even further, but I just want to stop here and show compounding works for or against you. It's important to understand the trend. And then the next few slides, we'll discuss and show why the trend is your friend when you're trading leverage and inverse ETFs. It's important that the trend is going in the direction, no pun intended, that you intended. I'll stop there, Gianni. Anything you want to add?
No, you're entirely correct, and that's why I was talking about the importance of when you're trading the sector funds, knowing the index that the fund is actually tracking. And I found it very helpful to conduct the technical analysis on the index itself, because when you're using price patterns to obtain price projections, you want to focus on the index, because due to the compounding factors in these leveraged funds, the measured moves from an arithmetical standpoint may not be the same as they otherwise would be on the index. So I like to do the technical analysis on, get my price pattern and my price projections set on the index. And then when they are satisfied in the index, look to exit from these leveraged funds. That's how I do that. So I'm analyzing the index, but I'm trading the leveraged fund in terms of entering and exiting, if that makes sense.
Oh, absolutely. Absolutely. And in this slide, we'll just further drive home just how to position your trades. In particular, in a trending bull market, compounding will work for you. And this slide highlights that. Just to break this slide down, if you look at the orange line in the middle of the chart, you'll see that the benchmark index return in this period is hypothetical. It's over a period of 7 days. The benchmark's return is 11.4%. So if we simplified 11.4 times 3, get you 34.2%. So let's just say if you maintain a position within a leveraged bull 3x ETF over this time, the benchmark's return is 11.4. If we're doing the basic math, 11.4 times 3 gets you 34.2. But you'll notice in the maroon colored line here that the return for the 3x bull ETF is actually 37.3%. So that's higher than the 34.2%. You may ask, why is that? It's compounding. In the slide that we showed before, it's just simply showing, once again, the trend is your friend. It's very important that the trend is clear. And in this case, we're in a 3x bull ETF, so we want the trend to be clearly to the upside. If we're looking at this chart, we can infer that the trend is clearly to the upside. If you're looking at the blue line there on the chart, you'll see that the 3x bear ETF, if you were invested during that time in a 3x bear ETF, it's actually only down 28.7%, which is less than the benchmark's cumulative return over that period. Once again, showing you that the trend is your friend when you're trading leveraged and inverse ETFs. The trend here is clear. It's to the upside with the benchmark's return of 11.4%. So your bear ETF, if you were exposed during that time, you don't lose as much. We can go to the next slide. And so alternatively, in the previous slide, the trend was clear when you looked at the benchmark index return over those 7 days. In this case, you see that over the period of 7 days, the benchmark's return, it's choppy and sideways. So in a trending market, compounding works for you, against you. In a non-trending market environment, compounding will work against you. The benchmark's return in this case is 2.4% over the 7 days. Again, assuming we're investing in a 3x bull product, you'll see that the 3x bull ETF return over this period is just 6.3% instead of the benchmark's cumulative return of 2.4 times 3, which is 7.2%. So you see in this scenario that compounding is working against you in a sideways non-directional market. And the same could be said for the 3x bear ETF. If you had exposure during that time, your return in this example is you're down 8.6%, which is more than the 7.2% of the benchmark's cumulative return during that period. So once again, compounding works for or against you depending on the underlying trend of the market. Again, I'll say it till the cows come home. It's important to monitor your trades daily. They are, if you're investing in leverage and inverse ETFs, daily investment objectives, tactical short-term trading tools. If you are invested in a product and you have this sort of market movement where the markets are sideways and choppy and no clear direction, you can be at substantial losses only after a period of a week or maybe even a month. If you're holding that long, you can have substantial losses. You can go to the next slide. And so Gianni mentioned a little bit earlier and showing some of the charts. I highlight some of the use cases for Direxion and leverage and inverse ETFs. But ultimately, once again, if you are looking to invest, whether it's sector specific, fixed income specific, broad market U.S. equity exposure, you can look at utilizing Direxion ETFs to enhance exposure, to hedge, for portable alpha, and to also trade volatility. I believe, Gianni, you will mention a little bit later in this presentation, just exposure to China, how to look at trading, what's taking place over in China currently. And we can move to the next slide. I just wanted to highlight a few funds that we are consistently seeing flows. And these are some of our largest funds within our leverage and inverse ETF suite. And I'll start with, the tech sector. I think most of us have experience to the tech sector through the Qs, but we've launched TECL and TECS, which provide you exposure to the Technology Select Sector Index, which gives you 100% exposure to the tech sector. So for those investors who are looking for 100% exposure to the tech sector, you can look at utilizing TECL and TECS. TECL provides you 3x bull exposure to the Technology Select Sector Index. TECS provides you bear 3x exposure to the Technology Select Sector Index. And if you look at the right-hand side of this screen, you'll see the holdings within this particular index are all tech. Microsoft and NVIDIA, are the highest weightings currently, but you also have Apple, Broadcom, AMD, Salesforce, Adobe, Oracle, Qualcomm, Applied Materials, and the rest of the holdings within that index are all tech. So highlighting this particular leverage inverse ETF pair, if you are looking for exposure to the tech sector, if you want to trade the tech sector, you can look at utilizing TECL and TECS. So again, we're providing tools for traders if they have interest in particular sectors to use. And this is TECL and TECS. And we can move on to the next slide. And so, as we all have seen, the Fed has decided to begin to cut interest rates. If you are looking to trade the short-term price movements within interest rates, you can look at trading TMF and TMV. TMF and TMV provide you exposure to the ICE US Treasury 20-year plus bond index. So within bond trading, just in general, this may not be as intuitive, but if you are anticipating that the Fed will continue to cut rates, so if you believe that interest rates will continue to decline, you would look to use TMF. So that's the Direxion Daily 20-plus year Treasury Bull 3X ETF. So again, if you're anticipating that the Fed will continue to cut rates, you can look at utilizing the bull pair, and that will be TMF. Adversely, if you believe that interest rates may increase, you can look at utilizing TMV, which is the Direxion Daily 20-plus year Treasury Bear 3X ETF. So once again, if you're looking to trade short-term interest rate movements, you can look at utilizing TMF and TMV. Again, that exposure is to the ICE US Treasury 20-plus year bond index. And then next, I highlighted this a little bit earlier. This is for your broad US equity exposure. If you don't have a particular index that you're following closely, you can always look at trading the S&P 500. So this is one of our larger leverage and inverse ETF pairs. Gives you exposure to the S&P 500. If you're bullish, look at trading SPXL, which is the bull exposure to the S&P 500, bull 3X exposure. If you're bearish, you can look at utilizing ticker symbol SPXS, in which provides you 3X bear exposure to the S&P 500. So once again, tactical short-term trading tools. You definitely want to monitor those trades daily because they are, giving you enhanced exposure. And as we've gone through in the previous slides, compounding can work for or against you depending on the underlying trend in the market. And we can move on to the next slide. I highlighted a little bit earlier in the presentation, we have a vast array of products. So whether it's the S&P 500, which provides you exposure to an index, or TECL, which provides you exposure to the the technology select sector index. Those are index-specific leverage and inverse ETFs. I wanted to introduce our leverage and inverse single stock ETFs. We launched roughly 2 years ago, leverage and inverse single stock ETFs on the Magnificent Seven. And on the next slide, I'll just highlight those funds. And Gianni, I believe you will talk through just some setups that you're currently seeing later on in the presentation within a few of our leverage and inverse single stock ETFs. But once again, whereas we typically have a large, exposure to leverage and inverse ETFs that gives you exposure to indices, we launched 2 years ago leverage and inverse single stock ETFs on the Magnificent Seven. From a bull standpoint, you can get 2x exposure. From a bear standpoint, it's an opportunity to hedge exposure in those Magnificent Seven names. So use case, once again, if you do have exposure to the Magnificent Seven, whether it be Meta or Alphabet, Tesla, you can look at enhancing your exposure utilizing the 2x bull ETFs. But let's just say you have concentrated positions in any of those names, you can look at utilizing the inverse single stock ETFs. So a great opportunity if you don't have a margin account and you want to hedge, or you don't want to outright short, you can look at hedging by utilizing the inverse single stock ETFs. In addition, if you don't want to trade options in particular, but you want to enhance your exposure to those individual names, you can look at utilizing the leveraged bull ETF for those magnificent 7 names, which you'll see here represented on the screen. And Gianni, anything that you wanted to add here?
Oh yeah, I mean, I look at these all the time, but I don't know if you were going to cover this. I definitely was going to. You launched a couple more single stock ETFs in the last month or so, I believe. Netflix,
Yes.
Taiwan Semiconductor as well. And I don't know,
Yeah.
is Broad come out or is that still coming through the pipeline?
It's still in the pipeline, but you're absolutely right. Last week we launched on Taiwan Semiconductors. Once again, semiconductors are hot. NVIDIA's led the market for the most part for this year, and looking to provide, again, traders with additional exposure to semiconductors. So you can look at our offerings there. You can go to our website to review, but then also on Netflix. Netflix is another leverage and inverse single stock offering that we recently launched with Broadcom in the pipeline. So absolutely.
Right.
And just to reiterate once again, for those who are new to trading leverage and inverse ETFs, if you go to Direxion's website, direxion.com, Direxion.com, we have an education center that I think is very helpful and useful. If you are studious and you want to test your knowledge, you can always go through our online Leverage and Inverse University. Allows you to test yourself in your apprehension of just leverage and inverse ETFs, the structure, the risk inherent. You could definitely go to our website and our education center to learn more about our products, and also frequently asked questions, a unique article that allows you to go through the questions that are normally asked from those who are frequently using our leverage and inverse ETFs. And this is our website here. This is our education center. As you can see, a great opportunity for you. If you click on the Orange Start Here icon, it takes you to just a general overview of just important topics and articles that are covered that are important to the understanding of leverage and inverse ETFs. So the resource center here, I would definitely say it's an opportunity to spend, a few hours just getting more familiar with leverage and inverse ETFs. Powerful tools to use and to add to your tool belt. But again, if you are going to use leverage and inverse ETFs, be mindful of the risk that are inherent with trading leverage and inverse ETFs. And these are just a few disclosures. So nothing else to add here on these slides.
All right. Well, in that case, Shawn, I can jump back into what I'm seeing in terms of short-term opportunities in the market. And thanks so much for explaining how these funds. You mentioned something at the end that I really brought home to viewers. You said spend a couple hours, familiar yourself with these products. And it's true. These aren't things to just go in blind and just, throw money at. Leverage can be a very powerful tool. It can be very rewarding, or it can be very cruel. When you're trading on leverage, you cannot afford to stay wrong for long. I trade leverage. I'm a big futures trader, but I do indulge myself in these types of products, periodically when I see opportunities as well. Because sometimes, like we're looking at biotech here, there isn't really a futures index to trade, on biotech, that has a lot of liquidity, for example. So, direct filling that void where the futures market doesn't have a really reliable trade. So it's the same principles, whether you're trading futures or leverage ETFs or options or, any type of leveraged market, you don't want to stay wrong for long. So anyways, let's get into biotech here, because I think there's a twofold opportunity emerging here with the biotech sector. I'll start off with the fun theme. Number one, artificial intelligence. We've only heard about artificial intelligence on the technology front, semiconductor front, with all the chips being produced to kind of power this AI revolution. But I think we haven't really heard much on the AI front when it comes to biotechnology, diagnosis of various diseases. They've done, various, studies and whatnot showing how AI is sometimes better and more effective at diagnosing illnesses than human doctors are. There's a lot to remember. There's a lot to know about when it comes to the body. So in terms of medical diagnosis and then actually, synthesizing data in a much more fast and efficient manner, I think biotech could be a unique opportunity on that front. The second thing to consider is the monetary policy environment. Interest rates coming down. A lot of these biotech companies, highly leveraged, a lot of debt, low revenue. They struggled during this period of high interest rates. As you can see, biotech peaked back in 2021 and more than halved. I mean, this sector really collapsed. But I think you're coming out of a pretty remarkable bear market here, and you're on the precipice of establishing a new one. We talked about series of higher highs and higher lows. You have printed that in this index. You see this rounding bottom formation here. You clear that. I think you want to be focusing more on the LABU, which is on the next slide here, in terms of short-term moves. So before, I don't know if you caught this, Shawn, when I was talking about this, I use the indices to kind of strategize whether I want to be long or short. You can still trade against the trend, but you're going to get bigger magnitude moves in the direction of the underlying trend. So if we're about to break out of that reversal formation on the biotech index, then I'm going to focus more of my attention more on LABU, the biotech triple leveraged bull shares. So right now, obviously the momentum is not to the upside. You got to be cautious of some downside, but just watch this chart here, the S&P Biotech Select Industry Index. We clear that resistance zone. This thing clears 8,000. Look out above, and I think LABU could provide some nice opportunities in that situation. But in the event we stall here at resistance and we cannot start a new bull market, then you're going to have opportunities on the downside. LABD. Maybe the Fed made a policy error. Maybe inflation is still a problem. In that situation, rates might not come down as fast, and there may be some issues that the biotech sector has to deal with. So, there's always two sides to a trade, and just make sure you're doing your due diligence before making a decision on whether you want to be a bull or a bear. Next, gold. I'm a big gold bull right now at a sector wide level. And I think the macroeconomic environment has been generally favorable for precious metals. Between the dollar having been weak over the last several months, it had a little bit of a pop, a pretty notable pop, I should say, in the last week. But interest rates have generally come down. So when you have been in a weak dollar, lower interest rate environment, that makes sense that it's bullish for gold. Gold also does well when there's monetary turmoil, when there's geopolitical turmoil. I think that we check off those boxes right now. So I'm watching the New York Stock Exchange Arca Gold Mining Index. This is what Direxion's leveraged mining funds track. As you can see here, we are up against key technical resistance, not just from 2022, but these technical support and resistance areas, they're more so zones than hard lines. We draw these lines here mainly for aesthetic purposes, but when we're talking about support and resistance, just understand that they are zones more so than hard lines. So, in this case, I'd say, technical resistance at 1150 to 1200 versus just saying, oh, it's at 1150, you're above 1150, it's bullish, you're below there, it's bullish. I still want to see it clear this high from mid 2020 to become fully bullish, but it is making steps in the right direction. So let's say the dollar at least doesn't start ripping to the upside, or you have a situation where geopolitical tensions continue to remain elevated. In this case, Direxion's 2x long gold miners fund, NUGT, could continue to see a bid. As you can see, it's been a pretty good year for this fund overall. Series of higher highs and higher lows, starting to break above this upward channel, but it said not so fast. We've been coming back down, looking for a higher low to form here. If that does, that would reinforce the bull trend. But let's say the situation unfolds where the dollar starts to rip, interest rates maybe don't come down as fast on the short end of the curve where the Fed is lowering rates. In that situation, you may see a recovery in dust, which is the 2x bear fund for gold miners at Direxion. In this situation, maybe look for a retest of this descending trend line here that you've connected a few of the highs over the past year. So that's what I'm seeing on the precious metal front. And then, as Shawn mentioned, some tremendous innovations taking place on the single stock ETFs. I'm a big Apple bull. I think Apple still got some juice left in the tank for its rally here. As you can see, it had a tremendous appreciation between April and July. We're looking at the individual stock here. It was up over 30%. So, in that period of time, you could have really had a tremendous return. Trading the bull 2x on the long side. But then also after that meteoric rise, the bear 1x would have given you an opportunity to hedge some of those gains as well. So, it's kind of like how when traders are trading options and they buy spreads, they're buying a call and a put. I suppose in theory, Shawn, you can buy AAPU and then AAPD simultaneously to hedge to the downside after a big move too. I'm not like that before, but here I am just thinking out loud. I don't know if you've heard of any traders doing that yet, but that's something to consider too.
Yeah, no, that would be an interesting trade for sure. I'm not sure we've had anyone have that strategy just yet. But to your point, if you are bullish or bearish, you can take either side with AAPU or APD. So
Indeed. Next here, Amazon. So obviously big retail conglomerate here, really has revolutionized the way that consumers shop online. Having a little bit of troubles here, and I think that has something to do with the whole inflationary situation. Remember that consumption accounts for about 70% of U.S. GDP. And if anything is going to change the way consumers behave, it's inflation. So I think Amazon's had some issues here trying to come to grips with that. It's been innovating on the AI front, has some really nice software it's been developing to help businesses and whatnot using AI. So I don't think that's the bigger issue. I think the bigger issue is how consumers are spending and what they're spending. So we'll see if we can form a higher low here. But as you can see, we made a lower low in August, come back up, made a lower high. So the trend isn't as clean here on Amazon compared to some of the other Magnificent Seven names. And I must say, probably my least favorite setup within the Magnificent Seven space right now is Google. Google facing some major antitrust issues. And actually, I think it had something to do with what's going on with Apple and how if you go on Safari, Google's been the default search engine. I think they're crying monopoly on that. They're facing some DOJ probes, and it's hurt the stock performance. But there is some pretty important support here. Let's say between like 148, 158. You saw how prices bounced off that zone. That was resistance back earlier this year. We're trying to make a higher high here, but I don't know if that's going to be successful. So what I'm looking at right now is for this to make a higher low and see if bulls can start to turn the tide a little bit in the near term. Meta. So I went from my least favorite Magnificent Seven setup to now my favorite Magnificent Seven setup. I think Meta is really going to be pushing the envelope. Mark Zuckerberg, I think, starting to change the direction of the company overall, and it's being reflected in the price. The stock has been in a bull trend for several months, and what you see here is an ascending triangle formation. You did just break out from that formation earlier in September. These are known to be continuation patterns, which means that the trend could continue in its underlying direction. And shares hit a new all-time high yesterday. That is indicative of a bull trend. But, one of the things happening on the Meta front right now is they're coming out with these basically AI glasses. So wearable technology. Apple's kind of done that with the watch. So now I'm wondering if Meta is going to be the one that captures the glasses market for eyewear. Microsoft is another one that's had a little bit of issues recently as well in terms of the trend. Not really a fan of how this low in August took out that low from April. That is a warning sign, to say the least. And then you rallied back up and formed this lower high here just a couple of weeks ago. So I really need to see this low from August hold if I want to stay bullish. I did see some analysts downgraded Microsoft here in the last day or two, so that's something to keep an eye on as well. But really, the longer-term trend in Microsoft remains higher. And as Shawn had said throughout this conversation, the trend is your friend. So as long as this thing holds above 390, 410, I think, you're probably going to see bigger moves to the upside. But if you break below that support zone, I think you will have some issues with Microsoft. I was talking about how Meta had a really nice bullish setup. NVIDIA does too. I started off my presentation today talking about how semiconductors have a knack or a tendency to lead both to the upside and to the downside. Well, NVIDIA is really the crown jewel of the semiconductor sector. So you had a really strong day yesterday in NVIDIA. It's up over 3% so far today. It's really pressing up against resistance here. You have this saucer formation forming here. This is a momentum pattern. You clear resistance on this bad boy. Okay, this saucer formation, let's call it around 135. There is a pathway for this stock to appreciate another 30, 40 bucks. Now, that may be hard for some of you to believe, but that is what the chart, the technicals, and the price patterns are saying. Now, of course, you actually have to clear resistance in order for that to happen, and these patterns can fail, but I think the conditions are right for a continuation of this uptrend, but if not, then you do have the opportunity to hedge to the downside. And a couple more ideas here. Tesla. I think Tesla, with the whole lowering of interest rates, could see a resurgence in some car purchases that could help drive this business back higher. I'm really watching the 270 level, not drawn here, but it's where my laser is. There's big resistance at 270 in Tesla. You have this symmetrical triangle. You broke out from that. I'm looking for a higher low here, but Tesla clears 270. I think you will see bulls start to turn the tide in this stock that has not made a new high since 2021. But near term here, bears do have some ground to stand on. So that 270 level for me is key in Tesla. And last and certainly not least, about Netflix, since this is a new fund for Direxion, you have NFXL and NFXS, the double leverage to the upside or single leverage to the downside here. Netflix has earnings coming up in a couple of weeks. It's had a really nice compound annual growth rate. It's growing its subscribers, still growing and expanding into multiple countries as we speak, and it's pressing up against its multi-year highs. So, this thing starts to clear this upper trend line of this channel. This thing breaks above 725. Look out above. I'd be a buyer of Netflix on those levels, but if it starts to drop below 650, you're probably going to see an extended consolidation. You may want to consider hedging on the long side. So I know we're coming out of running out of time here, and that's good because I'm on my last slide. As I mentioned, when you are trading with leverage, you cannot stay wrong for long. You have to know your time horizon, and these products at Direxion are meant for short-term trading only. You can day trade them, but I wouldn't do anything more than swing trading. You really shouldn't be holding these products for more than a few days. Maybe if you're feeling really aggressive, a couple of weeks, but I wouldn't use them. I don't use them for longer than that. We talk about risk management and cutting stop losses, cutting your losses when, the market's going against you, but trade sizing as well. Do not neglect that portion of risk management. You shouldn't be putting too much of your portfolio into any individual position. I trade in 10% lots usually, meaning that I don't put more than 10% of my portfolio into any given trade. Granted, I'm watching my portfolio every day. I'm trading on a daily basis. I use a 1-to-3 risk reward ratio, meaning that I'm not taking a trade on unless I can, triple what I'm risking. So if you want to learn more, we can have that conversation sometime in the future. But that's all that I wanted to share today, guys. So that's I think a good place to stop on risk management. So Zunaid's back too, so that's good.
Awesome. Appreciate it, man. And, appreciate Shawn, your insights, and Gianni, your playbook on what you're looking at as well. And I think the most important thing, which all of you have highlighted, is that, yes, it's exciting to talk about the leverage profits that you can get, but you also have to be mindful about the leverage losses as well. So risk management and, live to fight another day. There's always plenty of opportunities. The market's always open. Fun little fact I learned a year ago, that the market can't be closed for 3 days straight or something like that. So, there's always going to be an opportunity. But Shawn, Gianni, thank you so much. Appreciate you guys.
No problem.
Thanks.
Thank you.
Absolutely. All right, chat. We appreciate you for joining us again for this special edition of webinars talking leverage ETFs, and make sure you go to Direxion.com. Like Shawn said, there is plenty of opportunities to kind of learn about their products and get some education on how you can utilize the skills, the tools that they offer to enhance your trading abilities as well. The link is in the chat. We appreciate you for joining, and we'll see you next time.